Welcome to the podcast. Today we're talking about Indonesia's perfect storm. Let's begin.
I can't believe MSCI just gave Indonesia a negative rating for its information flow.
Yeah, it's a rough one. That's the lowest they go, right? It's basically a formal warning that things aren't transparent enough for global investors.
Exactly. And come to think of it, it's not even that the companies themselves are doing poorly. It's just that it's so hard to see what's actually happening. Like, the ownership structures are a total mess.
Right. And the English disclosures are lacking too. If you're a big institutional fund, you can't really put money in if you can't trust the market prices or understand who actually owns the shares.
Plus, there's the issue with moving money in and out. Those FX restrictions are a huge red flag for people managing global portfolios.
Definitely. The scary part is the timing. The full classification review is in just 5 days. If they don't address this, we could be looking at a move to frontier market status.
Which would be a disaster. I mean, the economy wouldn't collapse overnight, but the forced selling from EM funds would be brutal.
Yeah. It's like being relegated to a lower league. In a way, talent is still there, but the big money just isn't allowed to play anymore.
Exactly. And the numbers are pretty staggering. Some people are estimating outflows of up to $13 billion.
Right. And that's the real danger. It's not that the companies themselves suddenly become bad businesses. I mean, look at Bank Central Asia or Telkom Indonesia. They're still going to make money. But their valuations would take a massive hit because the international visibility just vanishes.
Yeah, and it's not just the stock prices. If the cost capital goes up and liquidity dries up, it makes it way harder for those companies to invest and grow. Plus, that kind of selling pressure would put an incredible amount of stress on the Rupiah.
True, though I guess there is a small upside. It might force domestic investors to step up and take a bigger role in their own market, which could make the system more resilient in the long run.
Maybe, but rebuilding that kind of international trust usually takes years, not weeks. It's a high price to pay for a lack of disclosure.
Fair point. It's basically a gamble on whether the government can move fast enough to stop the bleeding before the June 23rd deadline.
Exactly. And it's not just the transparency issues. Bank Indonesia is clearly feeling the heat too. They've already hiked rates twice this month.
Twice in 1 month. That's pretty aggressive.
Right? They jumped from 5.25% to 5.75% in just a few weeks. If you look back to February, they've added a full percentage point.
I mean, I get wanting to defend the Rupiah, but that's a lot of pressure to put on the economy all at once.
Right. Exactly. It's like they've decided they're willing to sacrifice short-term growth just to keep the currency from sliding further.
Which is a tough call. It might be great for the big banks' margins, but it's going to hit the property market and regular consumers pretty hard.
Yeah, mortgage rates go up, spending drops. It's basically a pick your more or less poison situation for the central bank.
True. Though I did see one piece of news that might actually take some of the edge off. Oil prices are plummeting.
Wait, really? I thought things were still pretty volatile.
They were, but Brent is down almost 9% this week. It's back in the high 70s. Apparently, there's a U.S.-Iran peace deal in the works to reopen the Strait of Hormuz, and China's demand has been pretty soft.
That's actually huge for Indonesia. Since they import so much oil, that should lower the pressure on fuel subsidies and help cool down inflation.
Exactly. It might even give the Rupiah a bit of a lift if the import costs drop. It's a win for airlines and consumer goods, at least, or something.
Right, though I guess the energy producers aren't exactly celebrating.
Probably not. And honestly, it's more of a temporary breather than a real fix for the bigger issues they're dealing with.
Yeah, it's like finding a bit of extra cash in your pocket. It helps for a moment, but the bills are still piling up.
Hey, exactly. And that's probably why the student protests in Jakarta are getting so heated. They're seeing the government push these massive spending programs while they're struggling with the actual cost of living.
right? Like that towards a bankrupt Indonesia slogan. That's a pretty heavy accusation. Are they mostly upset about the free meals program?
That's a big part of it. The free Nutritious Meals program is meant to fight stunting and help kids, which sounds great on paper, but the cost is astronomical, hundreds of trillions of rupiah. The students are arguing that this spending is what's forcing the government to cut fuel subsidies, which then drives up prices for everyone.
So it's a trade-off between long-term human capital and immediate survival. I can see why that's a flashpoint.
Exactly. The government says. It's an investment in the future, but when you're a student dealing with rising food costs right now, a long-term nutrition goal doesn't pay the bills.
It's a tough spot. If they cancel the program, they lose the health benefits. But if they keep it, they risk more unrest.
Yeah, and with the rupiah already under pressure, the government doesn't have much room for error. It's not just about the meals. It's about whether the whole budget is, I guess, sustainable.
Right. It really feels like everything is hitting at once. You've got the protests, the rate hikes, and then the MSCI warning.
Wait, what? Right, it's like a perfect storm. The timing is the craziest part. All of this converging in a single week.
Exactly. And the June 23rd deadline for the MSCI classification is the real ticking clock here. If they actually move Indonesia to frontier market status, we're talking about potentially $13 billion, to be honest, leaving the market.
Which would just put even more pressure on the rupiah. It's a vicious cycle. The central bank is already hiking rates to stop the bleeding, but that just makes things harder for people kind of on the ground.
Yeah, it's a brutal trade-off. They're basically sacrificing short-term growth and making loans more expensive.
Wow.
Just to keep the currency from collapsing.
It's a high-stakes gamble. If the oil price drop provides some relief, it might give them a bit of breathing room, but it doesn't fix the transparency issues MSCI is complaining about.
True, at the end of the day, the government has to decide if they can actually fix the structural problems or if they're just trying to patch holes while the ship is leaking.